Look at the markets today. Record highs, green numbers, and the promise of endless wealth. But what if I told you this is the greatest financial illusion ever staged? While you watch the ticker, the foundation is shifting. We are distracted by the hype of AI breakthroughs and the frenzy of meme coin surges. Ordinary people are betting their life savings on digital promises, blinded by the screen's seductive glow. Meanwhile, the US debt clock is ticking toward a somber reality, spiraling completely out of control. And while we focus on stock gains, global powers are watching that clock with a very different strategy in mind. Behind closed doors, major global players are quietly liquidating their holdings of US debt papers. They aren't just selling, they are accumulating physical gold at a record pace in high security vaults. The math is simple. $21 trillion in money supply versus dwindling gold reserves just doesn't add up. If the gold were revalued today, we could see a price of $38,000 per ounce to back the entire system. Traditional wealth, like home equity and retirement funds, is looking more fragile than ever in this massive transfer. This is the terrifying reality. We must clear the fog and understand the math before the final calculation is made. While the American middle class buys tech bubbles, China is quietly, ruthlessly liquidating United States treasuries. They are dumping our debt to hoard record tons of physical gold. Why? Because if the dollar loses reserve status, backing the current US money supply with existing gold demands a price of roughly $38,000 an ounce. If you have cash right now in a US bank, a retirement fund, or home equity, you are on the wrong side of the largest wealth transfer in modern history. But right before I show you the math of how a $38,000 gold price could wipe out your purchasing power overnight, we need to clear something up. Quick disclaimer, this is macroeconomic education, not personal financial advice. I am no doomsday prepper and I never want you to panic. I'm just a data-obsessed analyst who reads the central bank reports you lack time to read. I promise that every piece of data shown today comes directly from the Federal Reserve, the World Bank, or the IMF. We are dealing with facts, not crazy internet conspiracies. To understand what China is doing right now, we have to look at what they are watching happen to us. We often think currency collapses only happen in places like Venezuela, Argentina, or Zimbabwe, but it is happening right here in slow motion. Over the last 4 years, the United States dollar has lost roughly 20% of its purchasing power. That is not a bug in the system, it is a mathematical feature. In developing nations, citizens know how to survive this. They immediately protect their labor by trading government cash for hard physical assets. But average Americans were taught very differently. We were taught to hold cash in banks and trust government bonds. China has studied our financial system closely. They see our debt spiral. They realize the math no longer works and they are rushing for the exit. While we argue about grocery prices, the rest of the world is preparing for a new monetary system. To see how urgent this is, you do not need to look at Chinese politicians. You just need to look at a 28-year-old software engineer living in Shanghai. There's a massive viral trend sweeping across China right now, and it has absolutely nothing to do with TikTok dances. They call them gold beans. They are tiny, 1-gram gold nuggets, and Chinese millennials and Gen Z are buying them by the millions. Imagine being a young worker in Shanghai today. Now look at the American parallel. In America, the youth are day trading meme coins on margin. In China, they are stockpiling 1-gram gold beans in physical jars. The American middle class is relying on Zillow's estimates and paper retirement gains, completely trusting a financial system that the Chinese public has already realized is incredibly fragile. We are blindly trusting the digits on a banking app while they secure tangible wealth. But here is the most fascinating part of this entire story. The everyday citizens of China and the central bank are doing the exact same thing. From the average software engineer to the highest levels of the government, they are fleeing paper promises for physical reality. They know that paper wealth can be printed away, but physical assets cannot. They see the writing on the wall. They understand that a financial reset is not just some crazy conspiracy theory. It is a clear mathematical certainty. It is certain when massive national debt outpaces real economic production. But why exactly physical gold? And more importantly, how on earth do you get a mathematical price tag of $38,000 an ounce? Let us look closely at the hidden math the global elite are using right now. Most people have no idea this simple formula even exists. The current United States M2 money supply sits at roughly $21 trillion. Meanwhile, the US Treasury officially claims to hold about 261 million ounces of physical gold. Now, do the math. If the BRICS nations force a new global gold standard, or if a severe sovereign debt crisis forces a backstop, you simply divide that M2 money supply by the gold reserves. 21 trillion divided by 261 million ounces. This equals roughly $80,000 per ounce for 100% backing. But historically, monetary systems use a 40% fractional backing. Apply that 40% rule today. and you arrive at a price of exactly $38,000 an ounce. Think of this as a massive global game of monetary musical chairs. For the last 50 years, everyone happily danced to paper money. Now the music is stopping, and physical gold is the only chair left. To fit everyone, the size of the chair has to expand massively. But here is the dangerous flip side that most people completely misunderstand. If gold hits $38,000, it does not mean you're suddenly rich if you hold it. Why? Because gold isn't going up in value. The paper dollar is violently crashing in purchasing power. A $38,000 gold price simply means that a basic loaf of bread will now cost you $50 at the grocery store. It is purely a wealth survival mechanism, not a lottery ticket. And if you think a systemic reset like this is impossible, you aren't paying attention to the catastrophic doom loop happening right now. The United States national debt just crossed $34 trillion. That number is so massively large, it has lost all human meaning. But here's the number that actually matters to you today. The interest expense just to service that debt has now crossed $1 trillion. We are now spending more money just paying interest on old debt than we spend on the entire United States military defense budget. How do you pay a $1 trillion credit card bill when your government is already completely broke? You issue more debt. You desperately sell more government treasury bonds to absolutely anyone willing to buy them. But now, here is the terrifying thing. The biggest foreign buyers of our national debt, places like China, Japan, and Saudi Arabia, have abruptly stopped buying. They are quietly walking away. So if the rest of the world absolutely refuses to buy our debt, who buys it? The Federal Reserve. They have to blindly step in as the buyer of last resort. And exactly how do they buy it? They create trillions of new unbacked dollars. This incredibly dangerous mechanism is called monetizing the debt. It is the exact final stage of every single failed fiat currency in world history. Every time this happens, a violent crash follows. Those who recognize the historical pattern survive, while everyone else gets wiped out. We have seen this exact pattern before. In 1971, foreign nations lost faith in the dollar and aggressively started draining gold. It forced President Nixon to temporarily suspend the gold standard, a temporary political move that never ended. Today, they are not draining our gold, they are draining our financial hegemony. When the dollar eventually loses its dominance, something truly terrifying happens. For decades, we successfully exported our inflation by sending printed paper dollars overseas in exchange for real physical goods. But when those massive foreign nations stop using the dollar for global trade, all of those trillions of paper dollars will come flooding right back. They will come rushing back into our local economy, desperately chasing the exact same amount of domestic goods. This will trigger a catastrophic inflationary supernova that completely destroys whatever purchasing power your hard-earned savings have left. You might be thinking this all sounds like a crazy internet fringe theory, but let's hear what the actual insiders have to say. Watch what they do, not what they say. The elites are telling you to buy paper while they aggressively hoard physical metal. According to the World Gold Council, central banks are buying more gold right now than at any time since 1967. Listen to Klaas Knot, the president of the Dutch Central Bank. He stated that if the system collapses, gold provides the collateral to rebuild. They are quietly front-running the public. The smart money is securing their wealth while you sleep. They are proactively protecting their own national interests. Now, you have probably heard the obvious counter-argument from traditional financial advisors. Wall Street executives love to go on financial television and repeatedly tell you that gold is just a completely useless pet rock. They will gladly remind you that it pays no dividend, produces no cash flow, and legendary investors like Warren Buffett absolutely hate it. They desperately want you holding highly volatile stocks and risky corporate bonds instead. Now here's the thing. Sure, let us pretend that gold is just a pet rock. But I guess the central banks of the world just decided to buy 2,250 tons of pet rocks over the last 2 years. They just wanted some shiny new paperweights for their very large mahogany desks at the Federal Reserve. Of course they did not. Wall Street wants you deeply invested in paper assets because they collect massive recurring fees on your paper. They desperately need you firmly trapped inside their digital casino. But central banks want physical gold because it has zero counterparty risk. If a bank suddenly fails, a stock violently crashes, or government officially defaults, your paper wealth completely vanishes forever. Gold relies on absolutely no one else to hold its intrinsic value. It is truly the ultimate Tier 1 global reserve asset. When the powerful people who actually print the fiat money are desperately trading that paper money for physical metal, you need to pay very close attention. They are preparing for a massive shift. They see the underlying math. They already know exactly what is coming. So the music is slowing down. The smart money is already finding a secure seat. The question is, what exactly should you do right now to effectively protect your family? Panic is exactly what happens when you're entirely surprised. Preparation is exactly what happens when you actually see the underlying math ahead of time. You have a very limited window to act before the system permanently changes. Once a severe currency crisis finally hits the mainstream evening news, the absolute price of tangible hard assets will have already skyrocketed. The precious time to thoroughly prepare is right now, before the general public wakes up to reality. Your first highly actionable step is pure awareness. Stop watching cable television news. Start actively tracking the official World Gold Council reports on global central bank buying. Do not blindly trust the daily political headlines. Trust the silent global liquidity flows. Your second critical step is fully understanding the extreme danger of counterparty risk. There is a massive difference between owning a paper gold ETF on an app and holding actual physical assets like real estate or precious metals. If you cannot physically touch it, you do not truly own it. You are simply holding an unsecured digital promise from a fragile financial institution that might not even survive the coming historic crash. Your third vital step is carefully implementing the 5 to 10% insurance rule. Look closely at the historical precedent of the brutal 1970s stagflation era. A relatively small, highly strategic allocation to hard monetary assets can effectively protect a traditional stock and bond portfolio from an extreme, devastating currency devaluation. You absolutely do not need to liquidate your entire life savings to properly shield your family. Please remember, this is macroeconomic education, not a reckless recommendation to suddenly sell absolutely everything you own and go live in a remote underground bunker. We are simply building a logical, sturdy financial lifeboat while the macroeconomic weather is still relatively calm outside. You can certainly still hold traditional investments, but you must have a dependable hard asset hedge firmly in place today, because at the end of the day, a massive global financial reset isn't the end of the world. It is really just a transfer of wealth. The massive United States national debt spiral makes math-driven dollar dilution completely inevitable. China and global central banks are hoarding record physical gold to survive the incoming systemic reset. This massive wealth transfer will completely crush those blindly holding only paper assets, but it will significantly elevate those who clearly see the exact mathematics coming. The underlying financial system is permanently fracturing, and the people quietly running it already know. If you want to successfully stay ahead of the smart money and aggressively protect your family's hard-earned wealth, hit that subscribe button right now. We rely strictly on verified data here, never sensationalized headlines. Next week, I'm breaking down exactly which 3 major American banks are most dangerously exposed to the rapidly coming commercial real estate market collapse. You absolutely cannot afford to miss it. Until then, let me know down in the comments. Do you honestly think the United States dollar will completely lose its global reserve currency status in our lifetime? Yes or no? I will be reading your answers.